Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 25th of September 2016 and we're providing our views on the future direction of gold prices for the remainder of the year. As with the silver video published last week, we had planned to produce this as a single episode. However, due to its length, we have broken it down into two parts. Part 1 being broadcast today, and Part 2 will be broadcast on Tuesday. We apologise for this, but we wish to try and keep each video within 10 minutes maximum. At the time of writing this report, gold stands at $1,337 an ounce. Its 1-year high has been $1,370, its 3-year high $1,385, and its 5-year high $1,795. On Tuesday, the 6th of September 2011, late Asian trade had seen the wholesale gold price rise 1.4%, reaching $1,921 per ounce, its all-time high. This compares with a 5-year low of $1,049 achieved in 2015 and an all-time low of $34.78. We can see that at today's price, gold is not that far off its 3-year high, a figure we can see it beating in the last quarter of 2016. In our silver report, we mentioned that investment decisions are often based on psychology as well as mathematics, trend analysis and opportunity cost. We then continued to mention the industrial drivers for silver and then the economic ones. Well, with silver demand vacillating around 50% industrial and 50% investment, we can understand the importance of each. However, with the case for gold, according to the World Gold Council, the main demand drivers for gold are jewellery and technology, central banks and investors. In 2015, demand can be broken down as follows. Jewellery representing 57% of demand, technology 8%, investment 21%, and central bank net purchases 14%. With 4,212 tonnes of gold being demanded, very slightly lower than 2014, compared with a supply of 4,358 tonnes, of which 74% was mined and 26% recycled. So one can see that the supply of gold was a little over 100 tonnes more than its demand, according to the World Gold Council at least. It is estimated that there is some 186,700 tonnes of above ground gold. In the first half of this year, however, the situation has reversed, with demand exceeding supply by almost 30 tonnes. With demand reaching 2,336 tonnes and supply 2,307. Interestingly, the demand breakdown has also changed, with jewellery demand accounting for 40% of total demand, investment accounting for 45%, technology 7% and central banks 8%. We can see, therefore, at least for the first half of this year, a considerable shift towards investment demand for gold, away from the other areas, except technology, which remains more or less constant in percentage terms. Gold is used as a standard of value for currencies all over the world. The price of gold gets stated as a currency value, often in US dollars, and the price of gold can fluctuate with market conditions. Apart from the actual issue of supply costs, there are 7 significant influences on the gold price that any investor with an interest in gold trading should understand. And although there are more than these 7 influences, they are the main ones we take into account. 1. fear of a global crisis. Gold prices tend to rise when people lack confidence in governments or financial markets. World events often have an impact on the price of gold because gold is viewed as a source of safety amid economic or geopolitical turmoil and uncertainty. 2. Inflation and currency devaluation. A common reason cited for holding gold is as a hedge against inflation and currency devaluation. Currency values fluctuate, but gold values, in terms of what an ounce of gold can buy, might stay more stable in the long term. Gold is seen as a low-risk, solid investment in the midst of floundering currencies. Investors may feel encouraged to buy gold when they believe the value of their paper money will decline. 3. Value of the US dollar. The US dollar is still the world's dominant reserve currency, making it one of the main currencies that different countries hold for international trade. The price of gold and the strength of the dollar have a pretty clear inverse relationship. When the dollar is strong, gold is weak, and vice versa. Although this isn't always the case, it's a reasonable assumption to make based on past experience. 4. Interest rates and negative interest rates. Gold does not pay interest like treasury bonds or savings accounts, but current gold prices often reflect increases and declines in interest rates. As interest rates increase, gold prices may soften as people sell gold to free up funds for other investment opportunities. As interest rates decrease, the gold price may increase again because there is a lower opportunity cost to holding gold when compared to other investments. This is why we frequently see gold prices soften when the Fed threatens interest rate rises on the horizon, and then harden when they do not happen. 5. Central bank instability. Bank failures and irregular economic policies make buying gold seem like a safe haven investment. Once again, people flock to gold when the current paper money system experiences uncertainty. Government reserves. Central banks like the US Federal Reserve hold both gold and paper currency in reserve. In fact, the United States and several European countries hold the bulk of their reserves in gold, and they've been buying more gold for these reserves in recent years. 7. Jewelry and industry. Gold is not just a valuable hedge and a safe haven investment. Gold is also used in jewelry and industry. As mentioned earlier, in 2015, 57% of gold demand came from jewelry, and China, India and the United States are 3 countries with the largest such demand. Manufacturers also use gold in all sorts of electronic devices, from computers to GPS systems and medical devices such as heart stents. Again, in 2015, this represented some 7% of gold demand. So, we have mentioned prices, highs and lows. We've covered demand and supply. So where do we see the next 3 months heading and why? Please tune in to part 2, which will be published on Tuesday, to obtain our forecast. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.